According to investors, despite the global private equity slowdown in the past 4 years, Africa continues to rise. And even with tough economic conditions as well as the slowdown of private equity into emerging markets, buyout funds as well as corporate financing are on the rise. Joining us now from Mauritius to give us more insight on global opportunities in Africa for private equity is Papa Ndiaye, founding partner and CEO of the Advanced Finance and Investment Group. But before we join Papa, of course, Tumi, you also understand that he just came back from a conference where they were looking at the biggest trends around private equity inflow. So it'll be quite interesting to pick up what those trends are.
It is, because, you know, reading up, what we've seen is that private equity, all in all, around the continent has been falling. So this is just something that we're just going to have to see if there will be a pickup in that. We have seen trends in firms getting smaller amounts. So we want to know from Papa, is this something that is most likely to happen on a continuous basis?
I know, Tumi, you have a bias towards the financing side of the story, and I think it'll be also interesting to try and pull out from there what are the financing trends and into which infrastructural projects, if those are the leading sectors where that finance is going. So it'll be really interesting to pick that up. But in addition, but before we kill his story, let's quickly get Papa back on the line. Papa, thank you so much for joining us. And Tumi and I were just discussing here that we understand that you're just back from a conference where you were looking at private equity trends into and out of emerging markets. Can you give us just a little bit of an overview of what are the key trends right now when it comes to private equity for emerging markets?
Well, private equity for emerging markets, I mean, the major trend is that it's actually alive. It didn't really exist not too long ago. So we're still at baby steps, but we've been growing very, very fast, particularly in Africa. And I think the last 10 years have seen us really start to mature up a little bit. So I think this conference was really very timely in terms of giving us an opportunity to sort of express ourselves, exchange views, and try to understand what are some of the opportunities, particularly how we can use platforms such as Mauritius to register some of our companies, work with the management service companies here in order to redeploy ourselves across the continent.
Papa, it's Tumisha here. I think the registration of companies is quite important, but what is also a big deal when you talk about these types of deals is the financing. Tell us, how have rules or regulations such as Basel III and what we've also have called the Volcker rule impacted on banks' appetite for funding private equity deals?
Well, it's very interesting because I think it's been a double-edged sword. In some ways, some of the banks actually have gotten a little bit more scared, a little bit more skittish and worried about that. And in some other ways, we're starting to see banks becoming much more aggressive about actually funding private equity. And I think that you put really your finger on the pulse there with that question, because the next round of growth for private equity in Africa is going to require us to use actual leverage. So far, a lot of the deals you see done have been done on a pure equity basis, but the rest of the world does leverage deals with some level of equity. So I think that now that banks are starting to turn around and offer products to this effect, we're going to see a growth of the leverage part of private equity, which would be very, very much better for Africa in terms of availing more capital to companies.
Papa, this is Nozif. I just want to drill down a little bit into the opportunities. Can you give us a sense from a geographic and maybe even a sectorial view, where is private equity flowing?
Well, like most things that flow into Africa, they first flow into the big places. And I know some of your questions are in emerging markets, but my passion and focus is really on Africa. So if you will indulge me, I'll focus my remarks on our continent. And really, when I look at the continent, initially, most of the flows went to South Africa, and then they started going into some of the bigger places like Nigeria and Egypt. But over the last 3-4 years, we've seen that some of the smaller places are actually trying to get access to private equity. I can tell you our funds, with AFIC funds, half of our portfolio, if not 3/4, actually is in places like Chad, Rwanda, Liberia, and Cote d'Ivoire that are post-conflict, and Mauritania. So we've basically made the bet that it's actually better for us to use our expertise as Africans to go into the more difficult places before we go into the harder place, into the less difficult places, and really prove that if you have the right skills, the right risk management metrics and capabilities, you can make money anywhere in Africa.
Papa, to me here.
So I think the trend of democratizing private equity is going to be seen more and more. We'll see private equity all over the place.
Papa, to me here again, as you've mentioned, we're seeing flows into places that are smaller like Rwanda and so forth. So the African story is definitely there. But you know, the deals, the big 100 million US dollar deals are there, but they're very few. Can we see this trend coming back where we will see those headlines being made about those big 100 million US dollar deals again?
I think there is no choice. I think in any industry, the initial steps will require that we build a little bit of the pipeline for those bigger deals. Some of the companies that I invest in right now, I can see that the valuations just on a year-to-year basis are actually creeping up 5, 10, 15%. So once we get in there and we actually make these companies even more valuable with the private equity accelerator, those companies are going to be even more valuable. And those are the ones that I think you're going to see some of the larger players start to get into. And it's great. Everybody wins because the larger players don't have to do the dirty work of cleaning up, restructuring governance, setting up the right accounting standards. They can really treat these companies the way they treat companies in Brazil and some of the more developed emerging markets. So I think that the trend of having larger deals is going to be coming back soon. I think we'll see that, and we're working on that on our end.
Of course, Papa, this is Nozipho again. You must be lauded for of course, speaking to Papa there from Mauritius, because we're also wanting to find out, they've taken a really bold step by going into the rather difficult geographies that he's noted, Chad, Rwanda and the like. But it must be really interesting for investors who are sitting and watching and thinking, what are the risk factors that I should be looking at, even if I'm not going into the most difficult territories? What should I be looking out for, even if I decide to be safe and maybe start off in South Africa
100%.
or Nigeria?
100%, because regulations and the cost of doing business will always be one of those things that investors would want to know about. He mentioned registrations of funds. How long does that take? How many days would that take? What's the cost of doing that? And of course, cross-border trade. If you're in an import or export type of business, when you have trucks moving in between the different continents, will you be able to get that in the fastest and most efficient time frame?
Let me see if I can throw some of those questions back to him, to me, Papa. Thank you so much for joining us again. But just wanting to obviously acknowledge the fact that you have taken the bold decision to go into some of the more difficult markets. You've noted Chad, Cote d'Ivoire and the like. But if I was an investor right now and really thinking about greater exposure in my portfolio in terms of private equity, what are some of the red flags that I should be being aware of right now before I take that step, irrespective of which geography I choose to go to?
That's an excellent question, because I think that while people want to make it a private equity specific question, it's true for any business. You need to really get a sense of three things in my view. Number one, how structured are the people that you're investing your money in? Are they just fly by night, or are these people with proper structures and methods that you can test and diligence? And you come into the field and you look at us and you say, okay, do these guys have the right team and so on and so forth? Do they have the right back office and methodology? Second is, do you really have guys who know the situation on the ground? Because it's all about arbitraging risk perception versus actual risk. And if you do not know what's going on ground, there is no way you can actually, as a manager like myself, be able to sort of take advantage of local circumstances. Places like Chad have a huge risk premium attached to them, but we know how to maneuver there, so we're able to get the returns that are commensurate with the perceived risk when the risk for us is not as big as it is for others. Last point is really that you need to have a team that can really identify the right local partners, because no matter how smart you are in private equity, if you cannot team up with the right people locally, anything goes wrong. You can't just fly into a country where you don't reside and you've just started doing business in, and be in a position to resolve that problem. So you have to have a local person that's reliable and that really you have the right type of relationship. To me, those are three of the most important things to look at when you're trying to identify a manager to entrust with your entry into Africa.
Papa, thank you so much for that insight. It certainly is interesting to see just how important it is to be staying on the ground and the impact that it has when you structure those deals. That was Papa Mwadia Ndiaye, who's the founding partner and CEO of the Advanced Finance and Investment Group.